I guess to try and segue into the origin of the petrodollar, I mean, so English obviously becomes the lingua franca of the United States. The United States comes to dominate the world after World War II. But after the Bretton Woods conference, we, peg the dollar to gold, and then all the other currencies, I guess, are floating against the dollar. Basically.
Well, they were fixed against the dollar.
Fixed initially, and then eventually it would break down.
Yes.
We come to the 1971 infamous Nixon shock. Correct. That ends the official gold standard, although the gold standard had been, I guess, breaking down leading up to that Nixon shock. And then we have the origin of the petrodollar system shortly thereafter. So could you just walk us through that? Like what was the necessity to go from a gold to a black gold standard? How did the United States create this, through its relations with Saudi Arabia?
Exactly.
Yeah.
And of course, last year we had this 50th anniversary of that agreement with Saudi Arabia. So you had the Bretton Woods system, which was dollar centered, and the dollar and all the currencies, Deutsche Mark, the German currency, the Japanese yen, British pound, were fixed. The French franc were fixed to the US dollar, fixed exchange rate system. What was dollar fixed to? To gold. Yeah. And there was a fixed exchange rate of gold into dollars. The dollar price, what was it? Anywhere below $50. Was it $44 for a long time? I don't know, something.
Yeah, after Executive Order 6102, gold was at like $25, and then they repriced it to 43, I think. And that's where it stayed.
Exactly.
Yeah.
Anyway, so, something like that for 1 ounce of gold into dollars. Now, who could exchange actually dollars into gold? Well, of course, it was only central banks. It wasn't ordinary people. And that meant in reality, very little dollars were changed into gold. However, this changed in the 1960s. What happened was that essentially the US, the Fed, created a lot of dollars in the 60s. Partly to fund wars. I mean, already in the 50s, you had the Korean War, Vietnam. And then you had the Vietnam War, and that dragged on. And a lot of dollars were created because when you have a fixed exchange rate system, it's what the French called this exorbitant privilege. Right. It means that whoever is issuing dollars, so that's the US, can just create more dollars, and the rest of the world will have to accept it. That was the system. But of course, if you overdo that, then there will be people complaining, and they will say, well, hang on, maybe we shouldn't be part of this system, right?
Yeah.
Because you're taking advantage of it. So there's a limit, clearly, but the point is, when are you reaching that limit?
And they could express that vote of no confidence by redeeming the dollars for gold. That was kind of the backstop to the system.
So exactly. So let's look at how this happened. So the US was creating more and more dollars, and of course the Europeans noticed this. Part of the dollars that were created were used to buy European assets. In Britain, in Germany, in France, anywhere, particularly countries that were part of this, the Bretton Woods system, and most were. So then the Americans could just print dollars and buy up land in Italy, companies in Germany, whatever you want, paintings in France, castles in France, whatever. And of course, Europeans, after a while, noticed, well, hang on, this is kind of unfair. The US is taking advantage. But most countries were allies, or if you want, vassals. Germany, US occupied. I mean, it still is US occupied. It doesn't have a peace treaty. There's no constitution because it's suspended since the occupation through foreign troops. And it's still an enemy country in the UN Charter even today. So Germany had no standing to say, hang on, stop this. And of course, it was, all the US rights and NATO rights in Germany. But France was different. France was not even member of NATO. And the French leadership had always been proud to try to reestablish, having been defeated by Germany in the Second World War. So it was always had to prove something. And they, good for Europe, they were proud enough to speak up. And because they were not part of NATO, there was no mechanism to give instructions to them from America. Shut up, you be quiet, So, and they spoke up. So under Pompidou and then Charles de Gaulle, what we saw is, well, first they started to complain about it, and they saw no change in U.S. policy. So then they had to act. And what is the action? Well, you're giving us all those dollars, all those pieces of green paper, or the book bank money, the predecessor of the digital dollar, in exchange for all the real assets we're giving you. Well, what we can do is exchange those dollars into gold. They did. So several times they went to the Federal Reserve, so the Banque de France, on instruction of the French government, redeemed dollars into gold. Initially, the Federal Reserve Bank of New York, where the gold, a big part of the gold reserves were stored, said, we're happy to do this. That's the system. Of course, you can exchange it into gold. No problem. Of course, we'll keep the gold in custody for you because it's kind of hassle and dangerous to ship this around the world. You want to keep it here in custody. That's how it started. Yeah. But soon the French decided, well, actually, it's not quite what we want. We feel the gold actually should be physically moved to France. Now, that's where it gets slightly tricky for the Federal Reserve, for the US, because...
Not your keys, not your coin.
Yeah, if you actually lose the gold. I mean, it's one thing to just relabel it. Okay, France. Put the label on this gold here in the Fed, France.
But you still have the counterparty risk.
Yeah, exactly. And of course, this is the same still today with US treasuries, US treasuries held by China are not held by China. It's the same story. Where are they held? Oh, they're held by the Federal Reserve Bank of New York in custody for China. Oh, that's very nice. You know what happened in the Asian crisis in 1997? One country after another was pushed into crisis, which essentially was a Wall Street, Wall Street trick to rip off Asia. And that's another story. Perhaps next discussion we should have on the Asian crisis and some of these engineered crises. I mean, there's others which are all about ripping off people, ripping off countries. But so you had Thailand. These countries were previously growing quite fast, a lot of wealth generated, but the US had no share of that. So that had to be changed. So the Asian crisis happened, usually with the local central bank, just like in Japan, being the traitor, creating this asset bubble, and then you pull the rug, and you have your crisis. So Thailand fell, the currency collapsed. Indonesia, the currency collapsed. Korea. In Indonesia, the currency collapsed by 98%. Oh. Now, Taiwan was a bit of a special case because it had huge foreign exchange reserves. The second largest in the world after Japan. Number one was Japan. Number two was Taiwan. Number three was Hong Kong. And so everyone thought, okay, well, all these countries had pegged exchange rate, fixed exchange rate systems fixed to the dollar, pegged systems, they call it, because they could move the peg. And that was their decision. And these pegs all collapsed, as I warned actually in the year earlier, 96 about. But Taiwan looked like a safe case. And the government came in and said, no, the currency won't move. We have these huge foreign exchange reserves. We can defend the currency. Don't worry, it's not going to move. I think it was around 28 new Taiwan dollars against the US dollar. We'll keep it at 28. Don't worry about it. And I actually happened to visit Taiwan at the time. And a few days later, it moved to 30, 31, 32. What's going on? They have all the foreign exchange reserves. And I heard from my contacts to leading figures at the central bank in Taiwan, you know what happened? There's no way that the currency should have weakened. They had enough firepower to defend for years. But it fell and fell. Why? Well, how do you defend your currency? You have your foreign exchange reserves, US dollar reserves. You think you have them. What are they? The US treasuries. Where are they? Held in custody by the Federal Reserve Bank of New York. They gave instructions to sell them and buy Taiwan dollars. But they were held up. There were technical issues. So they couldn't actually sell the bonds.
Wow.
They heard from the Fed, oh, sorry, they've got some technical issue here. And of course, when you're under pressure and every minute counts and you can't actually do the intervention you plan to do, that's the power of holding in custody.
Yeah.
So the same, of course, for gold. And so the French, they literally sent their warships in the late 60s to Manhattan. I mean, dramatic scenes. You've got a French major battleship docking in Manhattan. And then, you know, the military, the Navy, French Navy coming out, walking up to the Federal Reserve Bank of New York. It's pretty cool scenes, you know. We need some more photos of that. But somehow the media was very quiet about this. And of course, their job was to literally physically get the gold, bring it onto the ship, take it back to France. And they did this. They did this several times. But then in August 1971, the U.S. leadership decided, okay, well, that's it. You know, we can't continue this. So Richard Nixon went on the television, and made the famous announcement: we're gonna, in order to defend the dollar against speculators and defend the American economy against speculators, we're going to temporarily suspend the convertibility of the dollar into gold. Temporarily, and we're still waiting.
54 years later.
Exactly. And so now, what happens next? Of course, the dollar falls and falls and falls and falls. Now, a bit of a correction would have been no problem, but if it keeps falling, that starts to be a problem for the US. And so the US leadership realized, okay, we've got to have another backup policy. There has to be a floor on the dollar. You can't allow it to just fall and fall and fall and fall, because we will lose the dominant status of the dollar in the world. And it was important for all the military expenditure, like whether it's in Vietnam or other places, you know, printing dollars and paying for it.
And the reason the dollar is in free fall in this circumstance is because the credibility of the United States has now declined significantly. That they're not making good on redeemability for gold.
Absolutely. It was a default. This was a default by the United States of America on its obligations. There was a system, it was a formal system with signatures and everything, agreement, IMF and all and so on. And that was part of the deal. The US defaulted on its promise that the dollar could be exchanged into gold at this exchange rate.
Right.
No more.
And this is the problem that all gold-backed currencies eventually suffer from. Is that the custodian or the man in the middle ends up not making good on the promise at some point, and systems tend to break down, right? This is just like the goldsmiths, and just like even governments intervening on certain banks and suspending redeemability for customers, right, in times of bank runs or things like this. So it's a story that just keeps on repeating.
So what was the backup plan? It was a cunning plan, that's for sure. The plan was actually two phases. Step one, because America still had a lot of influence over all the other allies and vassal states, Germany, UK, Japan, and so on. And the instruction given by the Fed was, you guys go out and print money now. You debauch the yen, you debauch the British pound, you create lots of Deutsche Mark. And they did. As you see, so the Fed had a lot of influence over these. That's what they did. Now, guess what? What do we have in the 70s? When? Actually peaking in 73 for the initial bout of is inflation. Significant inflation. Now they tell us, oh, that was an oil shock and blah, blah, blah. That's not true. It's very clear. It was the money creation by the central banks. The Fed created more money, but it also told all the other central banks to create more money. Okay, and that was the first policy to support the dollar. The others had to also print a lot of their currency. Step two. The underlying issue, of course, was the current account deficit, the US current account deficit. Who were the surplus countries? You know, all focus on them, just like today. Today is China. In those days, it was Germany and Japan. So the trouble was, from a US perspective, Germany and Japan didn't find enough things in America they wanted to buy. So the US side asked, what do they really need? And what these countries need. And of course, they are, you know, industrialized countries. So you import raw materials, you process them, and you export highly finished goods. So it's going to be raw materials. So what raw materials do they really need? Energy, oil. And here was the plan. They desperately need oil. If America could sell them the oil, we could balance the trade deficit and there would be no issue, right? And the dollar would be strong. So essentially, effectively, Saudi Arabia, the biggest oil producer in the world, was made part of the United States. Not formally, legally, but in reality. How? US troops arrived in Saudi Arabia and, looked around. A bit like when you open a new restaurant in Sicily in the good old days, and then the guys come around, one dressed nicely in a nice suit, and the other one perhaps looking a bit rougher. The nicer one is the one who talks to you and says, "Nice restaurant you're opening here. Welcome. We love this new business." And the other guy starts to, smash up a table or so. This is a rough guy. I'm gonna tell him to stop this. I'm sorry. I don't know what got into him. There's some bad guys around here. Stop this. You see, we'll protect you from bad guys like that. It'll cost you a little, but it's a protection racket. So the US was saying, "Oh, nice country you have here," to the king of Saudi Arabia. You're doing okay. You got all this oil, and be ashamed something happened to this. We're going to protect you, US troops in the country. In fact, they went a step further. They actually had this formal agreement, and they flew in 300 plus US bureaucrats, officials for all the ministries, and suddenly the Saudi Arabian government was US run. That was the agreement. That was the agreement between the Saudi Arabia and the United States of America. That essentially, the US was taking over the country. But there's some benefits. You get stability. We're going to sell the oil only against the US dollar from now. And this only emerged, this was classified information for a very long time, only maybe 10 years or so ago it became published. Of course, you then earn a lot of money on your oil sales. You get a lot of dollars. Well, 80% of those you will invest in the best investment in the world.
Treasuries, baby.
US Treasuries.
Yeah, such a scam.
That was the deal. So with that, you've cleverly solved two problems: the current account deficit and the because the oil. So Germany, Japan now suddenly needed dollars to buy the oil.
Yes.
So that gave strength to the dollar.
Exactly. And it's almost like a soft repeg, right? You depeg from gold and you have a soft repeg to black gold.
Yeah. And secondly, you had addressed the budget deficit, because Saudi Arabia was now the biggest buyer of US treasuries. And there's a few more stories, and I hope we can expand next time on this, because actually there was some Saudi Arabian resistance, but you can see how the deep state works. The CIA was backing this, and they cracked down on any resistance to this. So Saudi Arabia, in the end, totally caved in and became, a pliable US vassal.
Yeah. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.